Good morning, everyone. Apparently, I'm 1 minute late. And here we are. New all time highs yesterday and kind of grinding up right now. So I'm going to start where we are and I'll backpedal through the plan. Um, so we're at, as you can see, past 25, heading to 30. Now, right here at 35, and you guys can watch me do this. We have the IC whale small right here. Whoop, he's a little small whale. We have him right here at 35.40. And we got the IC whale all the way down here at 80. And 35. Okay, well, that's where the IC whale is. And we'll look at it in a minute. So, in theory, we should stall right around here or get sticky. So, we're pretty much at our destination for now, unless I don't know what, unless something happens. And 78 was a number that a guy, Master Bailey, that I've been kind of chatting with on ES has as his number. I don't know what Bad Hombre has. He'll talk in a minute. But I think most people, even when you project out into the future, are kind of seeing this as where we go. Oh, quick word about gamma. I was thinking about this yesterday. I'd actually thought about it before. Everything we use, most things we use, TA related moving averages, support resistance, where buyers showed up, is backward looking. That's telling us what happened, and we're trying to project into the future. When I look at gamma levels, that's telling me what's going to happen. These positions are here. It's not we think they're going to be here, they're here. And in the future, in 1 minute, 10 minutes, at the end of the day, as price moves within this range, market makers will have to make a reaction. So this is the only thing I know that tells me the future, not the past. Now, of course, you integrate the two, but this is a prescription. Market makers pretty much have to do this. Also, my daily plan is, hold on, I gotta show this on the stage. And Bad Hombre, you'll talk about that, what he's talking about in a minute. It's conditional. If we go wherever it is, up to 67.35, where we are now, market makers kind of have to sell. But then as we move away, they have to buy. Okay, and so similarly, if we should go down past 35, we have a reaction zone here. If we don't go there, it doesn't matter. But this is a forward-looking prescription. Even till the end of the day, when we have charm. This is a forward-looking prescription of, if everything stays the same right now, which we know it won't, where the options are going to decay and how the hedging is going to have to accommodate that. Forward-looking prescription. And now, of course, we combine that with TA, etc. And so, as of now, where are our zones? One zone right here, 37 to 45-ish. Suppressive, that's the customers are short there. But if we get over there, then we have this new zone, 45, all the way up here to 65. We have this new zone. If we're below, we have the 40-20 zone. If the whale stalls us, We have this zone, and we have 6710 zone, all the way down. And if we should break below 6690, break 6700, we have another zone right here. Now, positioning changes. People open and close trades, whatever. These big trades tend to stay. However, they also tend to get overrun by intraday trading, and we saw that yesterday. Uh, I'm not going to do like a time wind, rewind, and show you what happened, but I will just tell you that yesterday at 6,700 ish, there was sold calls. So I also sold. There was market makers were long there, and that area 6,705, 6,715. That area was a stall area until entities came in and started buying it. It could have been you, me, anybody. Could have been a hedge fund, back and forth trading, eat it away at it, and so suddenly what was there gets overrun. Let me show you some numbers. So down here we have 3,000, 4,000 contracts. This is the IC whale. Probably not breaking that. Here at 67.15, we have 3,000 contracts. Now there could be enough trading locally around here to affect this somewhat. Here we have 1,000 contracts at 20, 25. So we have enough contracts kind of in the playground we're in now to at least set the stage early in the morning. And then it depends. If 6750 call buyers start coming in, they can overrun this whole structure. If put buyers start coming in at, let's just say, 6710, I'm just picking a number out of my butt, somewhere over here, and we suddenly start seeing 5,000 contracts coming in, that could overrun the 6705. And so the maps will change, but broadly these features will stay the same. Okay, so let's get back to where we are, and like we're right against this IC whale stall thing. So let's just start from here. If we can somehow get over this, and to get over it, I wouldn't be surprised if we did, that it would take vol up, spot up, because expanding volatility expands the distribution of the gamma hedging. Just oversimplified, what that means is the lines become fuzzier and blurry and they're easier to get overcome. You can probably think of it more logically when we break below a level while IV expands and we understand, okay, IV expands, puts get more valuable or whatever, and levels break. It takes the same kind of IV kind of thing, or just real money buying, to break the levels on top, especially the bigger ones, or local buyers to eat through it. Or like I said, real money buying, hedge funds or asset managers, pension funds rebalance, etc. So if we can get over this where the IC whale is, then the next target zone is up near 6750 round number, and there's already, let's just see what's up at 6750 round number. There's already call buyers parked out at 45, 50, 55. So there's already a ladder up if we can get through this. If we can get through the 35 to 40 zone. Not saying that's, we can easily stall on this, could erode, and then this becomes suppressive and pushes us down. So 15, 35, your main playground for now. Below 15, Well, then we have round number 6,700, and things get a little loosey goosey below here. Let's just say below 6,705. This should provide a bounce. 6,780 should provide a bounce before that. 90 round number. Good time to reverse and head back to 6,700 ish. We could easily, if we went down, break around here. Now, let's take a look at something else real quick. I have it handy. It's easier this way. Um, Here's tomorrow's range, 66.43, 66.47, whatever it is, and 67.75. Let's put that asterisk in the back of our minds. And let's also put the asterisk of 67.40 was the weekly straddle last Friday, Friday to Friday. Somehow, in the options market's infinite wisdom, it wouldn't shock me at all if we don't break that or if we overcut it and come back in. Another mental asterisk. Okay. So there's that. So that's what's going on top there. And gamma is broadly positive. I don't like to say we're in positive gamma. We're not in it. But that's kind of become the vernacular, so I'll use it. But as you could see here on the heat map, red is negative gamma. So technically, we're right. We transition over 30, 35. There's negative gamma there. What are we talking about? Right here, market makers are short calls up here. They're short calls in here. This zone, if you average out the gamma, is kind of neutral to maybe slightly positive. So I don't like to say we're in it, but that's become the vernacular, like I said, so I'm going to go with it. In a broadly supportive environment. And up here at 67, 65, I think it is, we got huge customer sold calls. Let's talk about that for a second. What's going on up there? Well, I didn't show it to you because I don't want to distort the map. Here you could, these bars are all relatively the same size. You could see the relative hedging. But if I just expand the picture on top a little, wait till you see this. And we put markers here also. Holy moly. What's going on up here? 67, 65. We got 14,000 contracts. So we ain't getting there. Oh, thank you. Yes. Okay. So the right side is dealer. So this is where market makers are long, customers are short. So it's oversimplified support resistance. As you head up, they hedge opposite the direction of the move. Now this is kind of far away, so it's not going to have much influence. And as you move in the direction of travel this way, they'll be buying. This is market makers short, customers long. Customers are long around 2,000 calls here at 25. Customers are long around 1,500 calls at 40. But you have to break through this to get to it. So this is that big blue cloud you see. So if we get up here, that's going to start pushing us down. At the same time, if we get up here, pushes us down, but then they get too short, and it could attract us back up. So this is floating around in the background. I'll just do one more thing real quick. Now, if we want to look at the gamma right now, I like to look at position size because we know it's going to change. The gamma right down here right now is hardly anything. Gamma is related to how close we are. The gamma is the change of delta, which is what market makers hedge, and gamma is related to how close we are, we being SPX price, to that strike and how close it is to expiration. So right now, that doesn't have much influence. So it's a big bar, but it's really a tiny bar. But if we're over here, suddenly it's got a lot of influence, depending where we are. So positions, put the pictures in my map, in my brain for, or in, yeah, in my brain for where we could go. But if we go to the church of what's happening now, right now, here's the gamma setup. Here's what has to be hedged out, so to speak, think at the open. 15, pretty solid. If we break below, but, so here's 15, 35, 25, nice fly right here. Bounce around in here. Go up here, come back down. 15, 25, 35. You want to expand it out, say 40, whatever. If we get below 15, got a little bit of legs at 05. And remember, this 15 is sticky, so if we're down here, this 35 loses influence and we get a 25-15 kind of choppy thing. And then if the put buyers decide to come in and start buying puts down here, that pulls us below it. Conversely, if we're bouncing here and if the call buyers start to come in, let's say we're at 15 and they start buying more 25s or something, that pulls us back up. That's conditional. We don't really know. I don't really know. Yeah, I could, this tells the future. It doesn't tell the future of customer behavior. And so that's kind of what's going on. So, gun to my head, I think we're probably going to stall out here. I think the 15 to 35, 25 range is our initial playground. And it wouldn't shock me if we kind of come back down towards 6,700 after all. Now, I looked at the expected move earlier, and it was, I forgot, whatever, it's in my note. We have the expected move was, let's pretend it was around 25. Oh, we can look right now. Let's go right here. So what's the expected move? First, let's look at the E-mini expected move, and then we'll look at the SPX expected move. So the E-mini expected move right here, right now, if you believe him, is 17 points. All right, so let's say 15 to 20. So 15 to 20 points right here, right now, puts us up at 50 on top, 45.50, 15 to 20 points, puts us, say, 20 points down from 28, puts us at 10-ish. So the expected move right now, priced into the option chain, puts us right around here, 40-ish, 45-ish, and puts us right below here, right below the 15. Think of that as your chop zone. Okay, and I explained the graphic. Okay, I'm going to take a half a breath. I'm mental cues levels on. And if someone reminds me, I'll put discount codes in, whatever they call it.
Doc, those indicators are going to break your computer.
That's maybe that's why I only have 19 indicators. Maybe that's why my computer sticks. I don't know.
Yeah.
And don't forget, I have an equal crazy number on Think or Swim, and I have like a million tabs open up here on Chrome, and like 6 iterations of Chrome, each with like 10 iterations open. I don't know. Maybe that's why I stall. I don't know.
Well,
let me put ES up so that the folks can follow along at home.
Sure.
Go ahead. You're on.
Okay, so obviously yesterday was an excellent day. For those that were trading the trend, I'm seeing a bit of a stall here as well. But if we can get ES down to, I don't know, call it 10 points, 67.60, maybe a little bit more, I think we'll find a nice support level there. I don't think we'll continue higher off of that bounce, but I think that bounce will be tradable to the upside. If we do start breaking below that 67.60, I'm going to be looking for 67.35, 30, 65. So
Say that
between
again. 67 which?
uh between 67.40 and 67.30 is
Oh
kind
boy.
of the
Okay.
range.
Well, yeah. Okay. Well, that's 30 points. That's outside the expected move. Okay.
Mhm. So I think that's a little bit more unrealistic, but I think if we do start getting some momentum, we can get there. Um, Other than that, I'm going to be the way I'm going to be trading today is just taking little scalps off the edges. Unless we start moving up, then I'll obviously trade trend, but my expectations are low for today.
And the gamma situation kind of supports the idea that it'll be a consolidation day, maybe a little green, a little red, maybe we could trend a little bit, but we're broadly positive gamma and we have sticky levels around there. The fly in the ointment, I was going to say turd in the wood pub. I'm not going to say that because that's not nice. The fly in the ointment is VIX. Let me see if I can accidentally get the right one. That's okay. Is VIX. Okay, I don't want that. I want VIX. VIX is at 16, Sweet 16, having a party. If VIX starts to pop a little bit, I have no reason to say it will or it won't. If
Yeah,
VIX starts to pop a little bit, then from the gamma point of view, these levels lose their sharpness and we could come, down to 15. If that breaks down to 10, the expected move. And if, I don't know, if Trump does something, budget shutdown, we've got France doing some stuff with Russia, with troops, whatever, there's
yeah.
geopolitical. And then in the background, we have World War III lurking, hyperbolic, but, in the background, we've got Hamas, Israel stuff going on, and we've got um, all kinds of saber rattling
Have
with
a Yom
Ukraine and
Kippur
Russia and
instance
all that.
today.
Right, we have all this
Yeah,
geopolitical stuff that if the market doesn't care, I don't care. But when they start to care, then I'm going to start to care. So at least
right.
put an asterisk in the back of our collective minds and remember that suddenly you see a VIX spike or you see something funky happen. Go to your local news source and see if it's just noise or see if, like, Russian drones are flying over, whatever. So that's that. Okay, so let's get back to So here's the volatility dashboard while I'm here. And I didn't do a deep dive volatility right up today because there's really nothing to report. Everything is, is quiet, sanguine, party on, Garth. Maybe maybe a little too complacent. This is telling us tension. The VIX VVIX ratio is also flat. There's nothing here saying we need to worry in the vol space as of now. Strong trends over here. I mean, this is best optimized for 65 minutes for the day, but just for fun, I don't think it's going to change much. Let's put it on 65 minutes. And even at 65 minutes, 15 minutes rather, it doesn't change. Other than the Hurst exponent, this is telling us that this isn't random noise, this is a trend. which I think we know. Now this could easily flip once we, depending on the time frame, but we're not going to get into the minutia of this. Um, yeah, so there's that. Let me see. Do I have it's a VIX spread. I got one more thing I want to look at. 6 panel vol layout, correlation. Got that one. I don't know where it is. That what I'm looking for. Is this it? Here we go. VIX VVIX ratio. Um, it's actually surprisingly low. So this is saying that the market's kind of hedged. I guess all those puts they bought. This is saying the market's kind of hedged. Getting a tad dangerous, but not really. First component, 0.5. There's really nothing going on. There's nothing going on. I know the memes that you see sometimes where like they have the bear and the wife next to him, and she's saying it's the rent money, and he's saying double top, he's shorting the market. Well, you might want to say double top and short the market, but I don't know about all that. I'm just going to trade what's in front of me. I don't have any religion on what the market should do. It does what it wants to do. I don't really use it that much in intraday trading. It's not going to change that much. But if it's more like my forecast or barometer for the day. But if it suddenly gets out of whack, if let's say VVIX starts going up, then it's going to be a danger sign. If the ratio starts to flip up, then that's going to be a danger sign. So I don't really use it that much. Windows. Hey, you making fun of me? Excuse me. Windows 98, maybe Windows Millennium. Okay? Windows 95. Windows 95 was great. I don't know why they ever had to mess with it. Um, so yes, I don't really use it that much for intraday trading. I use it more for kind of a forecast at the end of the day or a road ahead. But what I will do in intraday trading, if I can find no, I can't find it. See, I lost it already. What I will do for intraday trading is I'm going to glance at this on and off all day. Actually, I have a different screen on my Think or Swim. I'm going to be looking at VIX, VIX 9-day, and VVIX back and forth all day. Like in my side view mirror, I'm going to be glancing at these all day long. I see VVIX doing something a little funky, or if I see the 9-day starting to pop, and then okay, that means near term nervousness, then I'm going to take notice. But now that
Quick thing.
you asked this question, I'm going to deep dive and see how I can use it intraday. Don't think I won't. I'll see if I can come up with something. So 6685 or so SPX, yeah, that would be the pretty extreme not happen. I guess that was a question directed at you.
At me?
But I think so. I don't know. He said, I think it
I
was
could see
maybe when
I
you,
could see 75 in the cards today.
let me,
It's
let
not
me,
I don't think very likely, but if we start to get a dip, I don't think we'd go much further than that. But I could definitely see it today.
so the gamma levels on ES broadly are 6750, 6765, kind of the zone we're in right now. And this is mental Q stuff like the 75 to 80 zone, then 90 on top. And then if stuff gets crazy, then towards 6,800. I don't know how those levels comport with what you see. All right, so let's take a look at the options chain. Always fun. And I kind of spent so much time on the option chain that I look at option chain and it tells me a lot of what these charts are telling me. Okay, so today's the second. Wisely enough, I'm not walking into the day with anything. What do I have for tomorrow? This doesn't look great. This was expected move based on whatever last week, and I kind of left it. But even though we're kind of right there, down $109, that's a nothing burger. Um, I certainly can roll these 64.80 puts up. This was put on last week based on the expected move. Where are we? Based on this. Based on this. I gave it a little room. Now, since then, I've also traded inside and outside the weekly straddle a number of times. I kind of trade within it, but kind of leave those as a placeholder for myself, if nothing else. And so you see the whole mess is down $85. Even with it like in my throat. I could certainly roll this up, get whatever little credit there is, and yeah, but whatever. I'm just gonna leave it alone for now. We'll see. So let's talk about today. So what would I do today? There's not much in the juice bar. So here's the IC whale, 66 AE. Do I want to join him? 35, no juice. I'll put 2 in like that. I'll see if I can get 50 cents for another 2. This may or may not fill, probably won't. Or I could join him. So now the expected move is 25. So this is like way out of the expected move. Really, realistically, even 85 for 50 cents is not terrible the way I like to trade. On top, okay, so we know we had those big calls at 67.65 right here. Let me change it from delta to open interest so you can see it. There's a 15K up here. So I could try to join them up here for 40 cents. Or once we get into the orbit of that, we ain't going there either. 70 cents, that's kind of juicy, isn't it? But so as not to get run over or just to have something to trade around it, I would buy a 50, 55 debit spread for 90 cents or fly it, something like that. I'll put that in like this for now. And then could add to the calls and turn it into some kind of broken wing butterfly. On the bottom, remember we had that 15 thing? Let's go back to here. We have this 15 thing. Where are we now? Let's get back to SPX. So what I'm kind of trying to demonstrate is how I'll look how to kind of use it to come up with a thesis. So let's go back to this. Let's go back to position size because as we move, those positions are gonna be there. And so if we get below 15, so really we should stall at 15 initially. Here's our first stall. So one way to think of it would be, let's sell where we stall, 30 cents. We want to maybe 10 wide for 75 cents. That's not bad. I'll take that for 75 cents. Or you could do a cheapie like that for 30 cents. When I do the cheapies, I'll tend to then build around them. I might use the same center and then buy one that's 10 wide or 15 wide and kind of build around it. Um, but there's different things. It kind of depends on your style and how much capital you put at risk. What's this? Yeah, if negative flows. But I mean, I don't know, bro. I know we want this is the most hated rally, but look at this. We're stalled out up here. By now, the market makers have hedged us out. Hedging is not as aggressive pre-market as it would be during real-time trading. And to talk about cheap flies, could also look at a call. Whoops. Okay, I had this already in. Could also look at a call fly. It's supposed to stall at 35, right? Could look at a call fly like that, or maybe some, I don't know, call fly like this at 35-ish. We want to do 30, 40, 50 for $2. That's already expensive. But this one for 50 cents, I'll put that in two. I'll just put it in different accounts so it doesn't kind of overrun the trade I have going on here. And that's it. All right. Anyone have any comments or questions or whatever? Oh, Chewy, you're supposed to tell the folks a little bit about your course.
Oh, yeah. Let me get into that before I say anything else on that, because then I'll forget. If you are a directional trader, I really would recommend today is trade and make your targets a little bit more conservative, and make your stops conservative as well. Just try and if you trade the winner, let it win. If not, stop out and make your loss small. That's kind of my approach today. Um, yeah, so the program that Doc's talking about. So we'll do a live one-on-one for 2 weeks straight with me. I'll show you exactly how I trade. I'll give you the indicators that I made. I do workshops with everyone who's taking the program on a weekly basis, and I also do the live trading in the program to kind of give you a hands-on experience with what we taught you in the 2 weeks. So pretty intensive. It's pretty good for people that are trading futures or directionally trading. That's kind of my secret sauce.
So now I've heard some whispers about you helping people pass the prop trading classes and all that. I don't really know from that, but I know that that's a thing that people, kind of get stuck on. You want to talk about that a little bit?
Yeah. So for those that trade prop firms with futures, I'm sure you've realized they can be difficult. My strategy is really good at kind of bending those rules in our favor and getting you paid relatively quickly. It makes it pretty. Uh, I'd say if you're new to trading or don't have a lot of capital to start trading, it's the best way forward, where you can make pretty substantial payments to yourself without putting that much money up front. Uh, it's not something that is for the weak people. I'd say it's hard,
Not for the
but
faint of heart, huh?
not for the faint of heart. Yeah, but it's definitely the best way forward if you don't have a lot of capital to risk in the beginning.
So, question. Well, I was just kind of listening to the way you were framing that. Is this not only how to trade levels and all that, but kind of some nuance within the way the system is, of the way the wins, losses, all that craziness is, that you manage to kind of game the system a little bit more, or did I misunderstand that?
Yeah, correct. So with prop firms, depending on which one you pick, there's a ton of them now. But there's the goal is to make your wins very big and your losses much smaller. Obviously, that's every trader's goal, but with prop firms, you really need to follow that. Um, and I think it's very important to trade that way with props so you can kind of get the most out of your payments. There's just a lot of payout rules and things like that you got to follow, and if you're trading too, let's say, whimsically, I think you're not going to have a good time with the prop firm space. So this is a very kind of systematic approach. The way I trade is not perfect, but it's incredibly profitable in the sense that like I do get a lot of trades wrong, but my losses are very, very small. And I trade full NQ contracts. So I
Wow.
think I think that's those pay well if you're in the right direction. So if I'm wrong, I want to be wrong
Okay,
quickly.
so we have Real FX Trades is asking, where can I find the course? And Rick Boyer is asking, and Rick's been with us for a while. I can offer it more than once. So I don't know if you have a link to throw in the chat, or I don't know if you could throw it in. I guess because I did it, I have to throw it in. Also, put it on your Twitter. Let's disseminate that. So talk about that. And the link should be on WAP. I don't know. You tell me where the links are.
Yeah, the link is on WAP. You'll see it as the Private Bootcamp Academy. I I offer it as many times as people sign up for it because it is one-on-one. It has to be scheduled. So once you submit and sign up for it, I'll reach out to you and get something scheduled that works with both of our schedules. But yeah, it's just a matter of reaching out. You can reach out through WAP, or you can also reach me in the Discord or DM me. Available
Okay.
to all.
Okay, and that at Bad Hombre, is that also your Twitter? Is that your like universal
That
sign?
is my Twitter as well. Yep.
That's your
At
Twitter. That's
Correct.
that's your Discord. That's your whatever.
Yep. And for those of y'all that already have the platinum uh, tag on Discord, you can also just message me on the futures chat. I'll answer any questions that you might have in there as well.
Okay, very good. Very good.
Um, Good luck, everybody, and make sure there's a political Twitter guy on there that uses the same name.
Oh, is
My
there?
photo on. Yeah, I always get tagged on stuff as if I'm a
That's
racist.
weird.
Yeah. But
And it
the
uses the same photo too.
no, different photo. But
Okay.
if they don't, if people are tagging him, they don't know
Right,
who
right.
the
I
right
don't know
one
which
is.
one to tag. Right.
Yeah, but look for the same photo and you'll find me pretty easily.
Okay.
I,
All right.
I I'm also
So look
open
at that
to.
face. That's the face you're looking for.
That's right. And if you have any quick questions, I don't mind hopping on a 15-minute phone call and just hashing out any potential issues or questions you might have. It's always a little faster.
Yeah, I have to say, Chewy, he's been telling you guys extremely available and like generous with his time. Sure, give me a call, whatever, and he seems to be like that with everybody. That's just kind of who he is. That's a good thing.
I annoyingly really like trading, so
That's part of it. Yeah, if you're passionate about it, you don't mind talking about it and doing it and whatever. It's like, oh
yeah,
yeah, it's like
yeah. You
talking
do
about
my wife a
football or
favor.
whatever.
Yeah, I don't
Or
talk
when you're in
crazy to
high
her.
school talking about chicks.
Exactly.
All right. I'm going to sign off now before I get myself in trouble. Take care, everybody.
Good luck, everybody. Bye bye.